Hello, warriors. Mary, Richard, Ryan, how are you? How's it going, buddy?
All good, mate. You?
Pretty good. So, dollar weakness in front of Moses coming down from the mountain to Brookings, right?
It's going to be funny if he doesn't talk about monetary policy at all, isn't it?
Yeah. So, what are you thinking here with dollar weakness and follow through here? And I know you were looking for a buy in yen, Ryan.
Yeah.
Still waiting?
Yeah.
PCE tomorrow.
I'm still waiting. I was umming and ahhing. We had those two lows the other day down in the 137s. It broke the prior low early NOV. I left it alone. I fancied buying a dip in dollar yen to run into power, but I didn't get it. So I'm looking for a move up over 140, maybe that 142 area or better, to start scaling in some shorts, and maybe power will give me the reason to, or maybe not, or maybe ADP will give me the reason to. Right. We should point that out first and foremost. We've got ADP in about 14 minutes, and obviously with the jobs picture being so important, that could be a bit of a swinger if there's a big variation.
You had the 10-year try and come out of this little wedge here. So I was thinking about you that, if we had some type of spike here, and it should carry the yen. Maybe what could happen here is a spike here and a lower high in the yen back towards 45 type of scenario back here. Well,
that'd be nice. That'd be juicy.
Yeah. So, that looks like that's happening. S&Ps, even though I guess it was some news that China was lifting some restrictions in areas. I look at what happened Monday. Everything was down, right? But the metals got it back, the currencies got it back, and the S&Ps are lower, have had follow through from Monday. So that's really the weakness on my board that I see right now.
Yeah, perhaps a bit of consolidation, obviously ahead of power. We still got month end going in. We had some potential M&A action in CAD yesterday, that sent that higher. There's not much going on this week. It's hard to pick a theme and try and stick with it trading wise, because something out of left field pops up and you've got to react to it.
Yeah, like people trying to sell the breakdown twice and then getting run over. Right. And now it's right back to it. And, I don't know, is it going to just break from here and fail, or do we have 38 in it? Tough call in front of two pretty major events. What do we have coming up here in 14 minutes again?
ADP jobs.
ADP, okay, so that gives us a kind of a view into Friday. So
GDP as well.
GDP too. Okay.
So we have lots of numbers.
And I just want to say, and I want to reiterate this. And good morning, guys. Good morning, Dale. Good morning. I just want to reiterate how important all this data is right now. I have to reinforce that, because it's something that we've talked a lot about this year, but it's increasingly important right now as the market is looking to find out when the Fed's going to stop raising rates. I mean, that's what everybody's trying to figure out. How fast is how quickly will rates stop rising? What's that terminal rate going to be? And every piece of data matters, and especially the jobs data, because so many people think that weakness is going to start in the jobs data soon, which is going to actually ironically help stocks be supported and risk be supported, but I'm not sure that's going to be the case. That's why this ADP, we got, don't we have JOLTS today too?
Later, Ryan? Yes.
Yeah. So yeah,
pending home sales as well. We got loads of stuff.
Well, yeah, all this data is going to be so entirely important. So I just needed to throw that out there. Sorry, Dale.
No, that's good. No, it's good, Blake. And just looking at the internals of the market, Apple looks pretty negative, like it could take a shot at these lows here. And, you know, semiconductors are an important part of the market, and they look like they had failing rally. By the way, beans are up again. Breakouts working there. In fact,
you know what else is breaking out this morning? You point out beans. I was just telling the ForexAnalytix community just a little while ago. Gold's trying to break higher too. Like it's had this little triangle consolidation. It's trying to break out this morning. It's like getting ahead of Jay Powell.
Yeah, why don't you grab the screen? I'd like to see that formation, Blake.
Yeah, sure thing.
Because I don't have anything special formation wise in gold, except, you know, the 200-day coming up here.
Well, you know, the thing is you know, we have I don't know, everything's kind of first of all, well, what I'd like to do before I actually I'll show gold, but one of the things that I wanted to ask Ryan, Kman, Stelios, Steve, you know, all the guys that have been awake longer than you and I, Dale. It's kind of like what are they seeing? What happened overnight? Because okay, so here's you know the way I'm looking at gold.
I see. Nice.
Right?
Yeah.
So yeah, I mean, you know, back when we were hitting highs here, you can see that relative strength was divergent. So you know, we talked about that, and then we said, you know, 1730 is going to be huge support. We've been talking about that the last week.
Yeah,
week and a half.
A good call.
Yeah, every you know, and you know, while we're above that, it's bullish, but you can see how we're trying to pierce that. You know, I don't just draw random trend lines to draw trend lines. This is, you know, you notice the multiple touches here, right? So it's like we had 3 different touches here, also 3 here. So, you know, when you have that's clearly a triangle. Now the risk, this is the risk, if you ask me, Dale, and everybody that's trading gold, or hell, just trading in general, because no one knows what this data is going to look like today. You know, people are making an assumption that, hey, you know, the jobs data is going to weaken, and so if the jobs data weakens, the you know, the dollar is going to weaken, gold's going to strengthen, you're going to see a rally in risk. That's the hand that's being shown right now with gold. Right now, here's the thing: how about if the data is strong and the dollar turns around and rips gold, and risk falters, and gold's going to set up a false breakout and go just like that. And we've been talking about how underperforming gold has been based on how, you know, weak the dollar has been recently. We would have thought gold would have been trading well above 1800, but it's not. And so that's, I think, the big risk for gold right now is what happens if we have, you know, strong economic data today, or we have a hawkish Powell. I'm sorry, I needed to mention that Powell's speaking today.
Yeah,
at the Brookings
How about
Institute.
A bad PCE tomorrow? That's their favorite number, their most important inflation gauge.
Right, there you go. Yeah, throw it all out there. I mean, we got so much crap going on. So anyway, I just pointing that out with gold. But I think you've got to hear from Ryan and Kman and Stelios.
Just quickly, I think you've got to ignore the short-term tech this week. Okay, so you know that pattern you've drawn there. I think you've got to half ignore it. You can't trust it, because, like you say, we could get an ADP that's plus 300. Positive for the dollar. You can get an ADP that's minus 100. You could then get Powell being hawkish or dovish. You can get an NFP, good or bad. You can get a piece. You know, when you're looking at short-term trading, you can't trust the tech in a big week like this. Stick to the wider levels. We know 1780, 90 is a big level. We know 1730 is a big level. You know, those are the ones you really got to look at.
But I want to talk about just short-term, just talk for really quick, just the failure or positioning, wrong footing is what I wanted to mention. Sorry, go ahead, Kman.
Good morning, Blake.
Good morning.
One word for the metals and commodities today: China. Only one word. The rest is going to be decided later. Today, there's some tentative talks about upping the vaccinations, trying to get open a little quicker and stuff. We see, and the CNY, CNH has been driving everything. It's been driving metals. It's been driving commodities.
You just pointed out, I mean, Australia CPI was weaker than expected, and the Aussie's up because of China, right? Kman?
Yeah, I'm still here. I was just coming to it.
Oh, okay. You were just coming to it. Sorry. Go ahead.
That's what I'm saying. So he's driving the Aussie, he's driving the Kiwi. There's also probably a bit of end of month, but yeah, as everybody said so far, I mean, I think we need to take everything into account. What's going to happen from now until the end of the week, because we can have double whammies, we can have massive saloon doors. To me, the surprise trade, and then I'm going to go over to the ADP because I have to update. To me, the real surprise trade tonight is a dovish Powell, not a hawkish Powell. I think everybody should at least expect him to just steer the same line and walk the same line. He has said that he wouldn't change that fast, and so far, the last big domino, which is the labor report, hasn't fallen. So my base case is not for him to be dovish, but that would be, in my opinion anyway, the big surprise. And then you would see, I think the bigger move would be if he's dovish.
But isn't the recent move in yields kind of telling us that the markets have shifted what they're expecting from the Fed?
No,
because the 2-year is still at 4.5% still. It's the longer end where the market is afraid of recessions and stuff like that. Look at the 2 years. The 2 years it's at 4.5. It's not that far from where they could end up, or give and take 25 or whatever BPs. But that's in the 2 years. You do that overnight. I mean. No, I mean, everybody is entitled to have an opinion, right? So to me, the biggest mover would be him being dovish tonight.
Okay. Well, thanks for that. I know, Kman, you're going to be trading the ADP. You're also in the ForexAnalytix community. Just so everybody can see here, this is like what the ForexAnalytix community looks like, and this is like us just chatting from this morning. You got the Flowonomics, which is the macro chat room. You've got the news and research room, the trades room, where like you can see, I just shorted some Aussie dollar already. So we talk about what we're doing in the ForexAnalytix chat room, and so that's where Kman's heading over there right now. Stelios,
I wanted
Ryan,
to ask Kman before he
Dale,
left.
Oh, I'm sorry, what?
I just wanted to ask Kman before he left.
Yes,
on the yuan, with the news in China, USD yuan right now trading 708.
Yeah,
pretty big break from that mid 720s. What are you thinking now?
696, 696.7, the figure is the big zone. If ever we would break that and stay below, it's the whole story is finished.
That would look like a head and shoulders, Blake, if you put a daily up on the yuan.
Yeah, I mean, I'll just quickly do this.
If you hold 7 or around there, if you hold 7 or around there, there's a few decent fips just below 7. That is going to be a sign. So for the time being, I still think it could be interpreted as short-term corrections. But be careful if you start to break below there, right? So
okay.
Then that means, and the thing is, just a little how shall I say, cheat sheet is not the right word, but look at where the market trades compared to where the PBOC fixes the dollar CNY. If the market is above, that means that the speculators are still not believing in it, but the market is trading well below right now. So the positions are getting unwound.
All right, guys. We have less than a minute before the data comes out. So I've got the dollar yen up here. That should probably be the most binary, I guess, move. I mean, if you get an ADP better than 200K, you should see the dollar yen spike higher. If it is below 200K, probably will come back down towards this 138.50 support. Got gold here, S&P. I should put up yields, but I'm just going to keep it on gold really quick, and we can always float over to that. Ryan, Stelios, any last comments here?
I still think that contrary to what I have to disagree with Kman, I still think that if if Powell's hawkish, we're about 100 basis points away from the 100 basis points away from the terminal rate. Oh, 127. So that's weak.
Yeah. That's going to support stocks. I mean, look at equities are moving higher. Well, at least near term.
Selling off.
Yeah, you know, unless people look at it and go, wait a second, you know, the market.
It's weak, but it's not negative. It's still another job number.
Yeah.
Like I said on the flow show, you've got to look at it. The market's going to react soft to this, but is the Fed going to change its mind over that number? And it's ADP as well, which we know is a bit flaky. Doesn't change anything.
Yeah. Good point.
I was going to say,
we do have GDP in like less than 15 minutes. So.
Yes, I was going to say one thing. We're 250 basis point hikes away from reaching what the market thinks is going to be the terminal rate. So and let's not forget, the market then prices a cut within a few months of the peak. So if not Bernanke, if Powell is not dovish, if he's not dovish, then I think those expectations are going to get pushed out. And yes, the big move has been in the longer end, 10 years and above. But I think the short end is going to have to reprice some. And I think the 10 year is going to move quite a bit as well. The other way, I mean, if Powell is hawkish. So for me, this is the big move. If he surprises hawkishly, I think it's going to be bigger than if he's dovish. But then again, you know, this is what makes a market. You know, Kman thinks one thing, I think the other. I could be very wrong.
That's exactly it. And that's what makes a market, is having these different opinions. But it's good to listen, and unfortunately, we have to listen to your opinion, you know, every single damn day here, Stelios. But
I know.
Just
fire me.
But it's really, really good to hear everybody's opinions. That's, you know, one of the great things about being in a community. And I'm glad you guys are listening in here. So let me go ahead and just so you guys saw the data flash, how quickly that comes out right here. That's one of the tools that are available with ForexAnalytix. Just know that if you don't know where that's at, it's over here in the calendar tab, and then you just can launch it from here. You know, it's next to the live squawk live feed that you see here on ForexAnalytix. Okay, so Dale, you know, we've got a lot of data coming out this week. How are you feeling about equities here, just in general? Like, I mean, I put out a poll yesterday. If you guys didn't see this on Twitter, I put out this poll yesterday. You guys, if you get an opportunity, just vote. You can see where we're at right now. You know, more than 50% of the correspondents of the 300, almost 400 votes believe that we're going to be you know, below 4,000, which is, I find it interesting. And the reason why I threw that out there is just because, as you all know, I think we're at a very pivotal area in the S&P, and I've been very hesitant about chasing risk up here. And I know I've talked a lot about it for the, you know, on the week ahead videos, but it is, I think that's really dangerous. You know, we've had how big of a move has that been from the lows? I mean, this has been a 15% rally off of the lows. You know, I don't know. I mean, I don't think the world economy is in such great shape that it should reflect that. That's just my opinion, but I believe we're stuck between this 200-day moving average, you know, breaking out and trying to break out to the upside, and then, you know, the risk is that we fail up here and we head back down into this, you know, bearish channel and actually finish off this head and shoulder pattern. So, Dale, what's your thoughts where we're at in the market, and did you vote? Damn it.
I didn't know there was a poll. What was the exact question? But anyway, I'm on your second alternative.
Right here, man.
That you showed.
I
didn't see it. By the end of the year.
By the end of the year, yeah. So this is I'm just trying to gauge everyby's
okay. Then both. I think that we're going to go to your first target.
Wait, no.
Second
by
target.
the end of the year.
By the end of the year, it'll be.
You can't play both sides. That's a Stelios move.
Well, what am I going to do? Buy it here when I think it could break 200 handles? I think it could break 200 handles and be above 4,000 by the end of the year.
Oh, come on! You're pulling a Stelios on me.
No,
I voted, by the way.
All right.
And by the way, also Blake, you said very correctly. Remember, for the last couple of years, we were saying, "Oh, data doesn't matter. Data doesn't matter." Remember, we were laughing about it, how it didn't really move much the markets. Well, now it's the exact opposite. Every single number counts more than it used to, because that we're all trying to gauge when the Fed will turn. just to ram this point home again once more.
100%.
Yeah, I wouldn't get too het up on the GDP. It is a revision. If there's a big variation, then yeah, we may get a move. But if it's there or thereabouts, it'll probably do nothing.
Yeah, and so there's so much happening here. Let's just take us over to the calendar really quick. We do have, obviously, ADP just came out, but there's that GDP data that we're looking at. We also have, and now I want to ask something else, because we do have the JOLTS number. I think that's going to be a big number here, at the top of the hour. So stand by for that. We got Powell speaking. We got Eurozone CPI last night, and we had Australian CPI came in weaker than expected. When I got up this morning, because I got home late last night because of some kids sports. So I saw the CPI in Australia, and I saw it was weaker than expected, but I just quickly glanced at it, went to sleep, and I was thinking, oh yeah, the Aussie will probably be lower, because I just wasn't trading ahead of Powell today. And when I got up this morning, obviously, Kman mentioned it because of what happened in China, or all the China talk really helped up the Aussie dollar. But man, we have inflation data that's just missing. What kind of trend is that showing you guys, about what might be happening globally?
It's softening everywhere. Nearly everywhere is softening.
Yeah.
We've seen it in the US, 4 prints lower on headline, 1 on the core. The thing with the Eurozone is it's slowing as well, but the core held up. So a similar situation to what we watch with the US. If you look at someone like Spain, they're trending lower in inflation. Italy, not so much. It's still a mixed picture. The UK still climbing, probably one of the few still climbing now. Japan as well, still climbing. But generally, it seems a lot of the inflation is starting to perhaps turn.
And remember, guys, and girls, when we are looking at inflation, it's a year-on-year rate. So you're comparing to the year before. So when did the big spike, when did the big increase come? Well, January, February, March this year, right? So when we get to first quarter of 2023, by definition, inflation has to jump a lot more than it is now to just match the change that we saw last year. So I think all else unchanged, mathematically, we're going to see a drop in inflation in the first quarter of 2023. So we have to be aware of that.
And that's why central banks move from headline inflation to talking about the core. It's the old account of smoke and mirrors.
Yeah. Okay. And that's a great point, Ryan. So this is like this is the whole narrative that's taking place right now, and why everybody is so adamantly believing that the Fed chairman is going to really slow down his rhetoric. But I'm going to ask you guys today, what do you think about that? And I'm sure Steve is here. I'd love to hear Steve's comments too, about what he has to say about Powell, if Powell's going to let up on the rhetoric or not.
I've already talked about it, Blake.
You haven't talked about it this morning. We have new listeners here for the very first time.
I very much doubt that anything is going to change in what Powell is going to give us.
Okay, so you think Powell's going to just stay the course?
Yes.
Okay. All right. Interesting. And and this is where the market is leaning against, and in my opinion, that's why we have the S&P where it's at. I know a lot of people look around and they go, oh man, our economy is so weak, and we're going to really see a slowdown in first quarter of next year, and recession's really going to take hold globally. Why are stocks bouncing so aggressively? And that answer is because people feel that the Fed chair and other central banks are really going to start to pivot with all this disinflationary information or disinflationary data that we're seeing globally. So and it's going to be interesting to hear if Powell has anything to say about that today. Ryan, what do you think about the JOLTS data and the NFP as we go into Friday, because that's going to be super important? Do you have any thoughts there?
Yeah, well, the JOLTS data is a look at the ratio between unemployed and how many job openings there are, which has been there's been a real big gap. There's however many millions of job openings and so many millions of unemployed people. You've got to think, why hasn't that closed up?
Yeah.
The number I look for in the JOLTS number is the quits number, because that potentially shows you people who are trading up jobs. So not coming out.
The JOLTS number?
Within the JOLTS number, there's one called the quits number.
Got it.
And that's a potential indicator of people who are moving up the ladder, if you like. So the higher that number is, the more people are, getting higher paid jobs, better jobs, that sort of thing. But regarding the NFP, we know it's a lottery, and that reminds me, I've got to get the competition up and running today. So stay tuned for that.
You guys make sure you do enter that competition, because you can get a free month of ForexAnalytix, which is $190. So and it's free. We give those out every single month. We give out, how many of them do we give out usually?
3.
What?
Stelios, you are so generous. That's awesome. Way to go.
Each one of them.
So all right. Well, hey, we got about 5 minutes. Dale, I know you have an interview coming up with Gary.
Yeah.
All right. Awesome. Hey, I wanted to ask you, Dale. So what are your thoughts about what's your best idea going into today? I mean, it's a lot of data coming at us today. You got Powell coming at us today. What's your best idea for the markets right now?
Buy VIX.
Buy VIX. I like the VIX. Let me just show you something. I like that. Here's the ForexAnalytix chat room. Here's the, this is the trades room. Sorry. Here's the general chat room. My bad. Here is the chart that I posted this morning on that. Boom.
Nice.
Yeah. I mean, that's a big ass triangle. I mean,
maybe so back to 27
volatility futures here.
Yeah.
I like it. That means you're playing little risk off.
Yeah. Right.
You little devil. All right. Ryan, what's your best idea today?
Oh, best idea today. I'm just going to be.
Don't sit on your hands.
No. I'm sitting here with my fishing rod. I'm waiting to see what fish I can catch.
You are not. You're going to be sitting at the pub watching World Cup games. Damn it.
Oh, okay. You called me out.
All right. So you're really sitting on your hands. That's it. That's the best you got.
I'm just gonna trade the data as it comes. If you get a big move in anything, then if it hits a decent level I like, I'll nail it.
Fair enough. All right. How about you, Stel? What do you think?
Well, I'm not going to trade before, not Bernanke. Jesus, what? Why am I saying this anyway?
His name's Greenspan, for crying out loud.
I know. But on a hawkish Powell, I'm going to be probably selling treasuries, and I'll be looking to buy dollar pairs. Probably the best one for me is going to be dollar MEX, because it's broken below the previous support, and it's going to be a nice fake breakdown.
You know what? You must be sitting in the chat room and reading what I have to say in the chat room. B,
I honestly didn't read it
because you take my crap.
Anyway, and if it's the other way around, you know me, I'm going to be buying. Actually, I don't know what I'm going to be buying. Silver is up already 2.5%. We'll see. I'm going to be selling dollars against something. Well, I still have some time.
Steve, how about your best idea today? What you got?
My best idea today is that we should wait for Powell to speak and act afterwards. I think that liquidity has dried up. If you are already in winning positions, you should just manage them. Of course, I'm not suggesting you should close them. But in my opinion, we should first wait from Powell. I agree, though, 100% with the comments that Kman made a lot earlier, meaning that there is going to be a much bigger reaction if for some reason, because that's going to be the surprise, if for some reason Powell sounds more dovish than expected, then the opposite. So, yeah. That's it.
You know what the big surprise would be is then the dollar yen breaking down, because a lot of people have been trying to buy this dollar yen because it's at the 618 retracement but it's floundering, right? Can't even get its head off the mat.
Yeah.
So we could.
That's one of the biggest movers if or when Powell turns dovish.
There we go. Kman's back. Awesome. Hey, we do. Kman, what's your best idea? You got 10 seconds.
Well, that's it. I mean, if Powell is dovish, sell dollar yen. If Powell is hawkish, sell euro dollar.
Awesome. Well, we have We have US GDP coming out. Let's see if we get a bit of a move. I'm sorry, I just closed out the data flash. So here we go. Let me pull that up again. And let's pull up the charts. And we got just a few minutes. Seconds.
Seconds. S&Ps have come off.
Okay.
Nothing else.
Let's go. I don't see it. 2.9 GDP,
wow,
so that's stronger.
That's a little stronger. Everybody just got finished selling the dollar, and they might come back and buy the dollar again. They're like, shit. I mean, sorry, shoot, got stuck on the wrong side, and then this is to Ryan's point. Don't get mixed up in these little bouts of data, right, Ryan?
Yeah, exactly. That's okay. It's a bit better, but yeah, there's nothing to set the market alight with.
Yeah, watch those key levels that you pointed out. Hey, everybody, if you haven't checked out the trader funding program, make sure you do that, because if you want to learn how to be part of the ForexAnalytix community, just join in, take an assessment, and try to trade our money. And then this way you don't have to risk your own money, and you keep 75% of the returns. Plus, you're in our ForexAnalytix community. That means you're going to get ideas not only from myself, but Kman and Stelios and Steve and Ryan and the whole team. So
there's no time limit.
There's no time limit. Yeah, you can take your sweet time, passing the assessment, and trade at your own pace. So so only way you're going to become successful, not be under pressure. But hey, I want to say, Dale, thank you so much for hosting us.
Whatever,
as always. ForexAnalytix team, thank you guys, and you guys, good luck today. Good luck with JPY.
Yeah. Good hunting, team.
Good luck with Bernanke too.
Yeah, good hunting, everyone.
We get you his book for Christmas.
All right, so the dream team. Thanks for another great session. Gary Kaltbaum, welcome back to F.A.C.E. How are you? Contributor to Fox Business and radio show host and analyst extraordinaire. How are you? How you doing, Gary?
Greetings. All is well. How are you?
Good to see you, even though I can't. Good to hear you. You want to share your screen and tell us what's top of mind?
All right, hold on. Share screen. I got to figure this out here. Share screen.
Down at the bottom.
Share. How's that?
Coming up. Okay.
Got it?
Yeah. So what kind of bank is this? Is this where is this? It's an ADR.
Oh, I did forget that. I don't even know why it's up there.
It's in India.
Yeah, that's a good looking chart.
Yeah, it is.
First off, let me just state for the record, and it's something I've said for, I don't know, since Christmas of 2018, when Jay Powell showed who he was. I continue to weep that we have to worry on a daily basis what comes out of his mouth, what comes out of Bullard's mouth, and the rest. I weep that we cannot have free markets, the freedom of traders and investors and speculators to do their thing without the interference or interloping from these people and their whims, and these same people who have been wrong on just about everything. And now we have another day where we must wait on what he decides, the most powerful man on earth that has been wrong 100% of the time. And people disagree with me. But I believe he was 95% of the inflation spike, with the printing to 9 trillion and getting the European counterpart to do the same at the same time. And look where we are now, having to deal with what we're dealing with. But that's just
hard to give credit to someone who started the fire, trusting them to put it out. So, so I get your drift, and it is a more difficult trading environment with this thrown into the mix, but we have to deal with it. So dealing with it, what's your take on the market, Gary? We've had a decent bounce from October, not as the magnitude smaller than we had during that June to August rally. Do you think we have a bottom there at that 3,500 level, 3,600 level?
I think a bunch of things have put in their lows for the cycle, but I think a bunch of things have not. And, sometimes we get what is called a sore thumb, the one that really sticks out. And it's really amazing to me, but also not, in that I have been trained by O'Neill, Stan Weinstein, Gil Morales, some of the greats. And when I say trained, I learned from them. O'Neill, I went to many of his seminars. Gil was there also. And I'm always a big believer in the main trend and big picture. And there's one thing that stands out for me is, first off, look where the Dow went, where the Dow went to right here. And then amazingly, look at the NASDAQ. So maybe this is the equivalent of the Dow. It's off a little bit, but you get the point. I'm just thinking, if the Dow comes in, what's to keep the NASDAQ from just taking this sucker out? And then we're talking about the 40s in the NASDAQ, if not more. So we'll see.
Bifurcated market.
One of the most I've seen in a very long time.
How about in your career, Gary? I bet in your career.
It's up there.
All right.
The Dow versus the NASDAQ. But it's also, there are certain rules that I follow that have been handed down to me. And one of them was, Bill O'Neill said to me and others in a workshop, in bear markets, the past leaders will drop on average 70% from their highs. And I never believed it until it happened in 0 to 03, happened in 08, and now it's doing it again. And I think what you're seeing here is the big leaders were the tech, were the software, were the internet, were the mega caps. And I think what you're seeing is exactly that. They are down for the count. When I say they ain't coming back, at least for a long while, there'll be a few. I just say it's stunning. And, the latest one is this CrowdStrike, which is down. And just so you know, this is one of those names where I get 100 emails on this stock all the way down. It's one of those famous names, and it's got to go back up, earnings and sales. So my main message to all your great viewers and listeners, if you have not learned the lesson from the past year and a half, we called all the bubbles. Our main theme on the crypto was 90% of the coins would drop 90% or more, with most going to zero. And then the next line, it's just a blanking bubble. If you haven't learned the lesson about how far down things can go, you better take a step back and learn, because this will happen again in the next bear market again, because history does repeat itself. So for starters, this divergence between the Dow and the NASDAQ is worrisome. It is risk off versus risk on. I don't like, other people do, but I don't like these U shapes and Travelers and IBM, things like that, because if they start coming down, look out. It reminds me of money coming out of risk on and going into these names, and I don't think it lasts. But we're open to all outcomes, and we'll see how it plays out. It's a tricky freaking market, and I have been the most patient I have ever been in history, tenfold in the last year, by just sitting on my hands a lot, and it's paid off big time.
Do you think the dollar has peaked, and do you like the miners, Gary?
There's the UUP. All we do right now is draw. We thought the dollar was peaking here. If it takes this out, there's going to be more to the gold. Simple as that. If it holds here and starts turning up, that'll be another story. But leave no doubt. And I said to you about sometimes things are so evident. Look at this bull market in the dollar versus currencies, other currencies. Holding the 50-day the whole time, finally hit a wall right here. Simple as that. And look at this right here, the exact opposite in the gold. And when the dollar stopped going up, gold stopped going down. And when the dollar went down, here goes the gold. Just these direct correlations must be watched until they're not correlations anymore, because you never know how long they last. And the same thing has happened for the indices, almost to the day, pretty much to the week, between the dollar and yields and markets and commodities, until it's not. What I'm waiting for right now, if we get to the point where the indices gag as interest rates come down, then I think we head over the mountain to where the market cares about yields and now caring about bad earnings and potential for a pretty good recession. That has not happened yet as of this second.
Okay. Your take on this recent bond rally we've had, which is, do you think that we've seen the lows in bonds? Because that may be, but everyone thinks that yields at peak. Can't there be like another push up in the 10-year to 440, 450?
Oh, absolutely. It can. And look, we saw it here, and I remember they told us it was the peak here, and we had a good drawdown. And by the way, the market did this at the time. To me, this is kind of sort of a normal short, maybe intermediate term pullback. And as I showed you the dollar and drew a line under it, we'll see if yield starts coming this way, we'll know. But we'll see if they start going that way. We're at a moment in time where we just gotta, usually I can say to you, I'm pretty sure this is what's going to happen. I can't tell you just yet, because we're dealing with mouths. We're dealing with Powell, who, by the way, if he's real tight, it may take yields down, believe it or not, that maybe he's fighting inflation. You never know what the reaction is going to be. The old line, it's not the news, it's how the market reacts to the news. It, always speaks volumes, especially when you got all these yappers. So, yeah, I think we're at another moment in time right here for the dollar, for yields, the whole bond market complex. And again, it's just a moment where I'm been a big time spectator as of late. For somebody that manages money and has a service, not easy. But
what do your clients say? Like, while the S&P rallied from, 3,600 to 4,000. Gary, how come we're not in? Should we get in now? How about now, Gary?
Well, we did get in, but not in individual stocks. We bought in this confirmation day right here on the SPY. I wish I bought the diamonds, which was much better, but I have still a lot of cash. But they're still thanking me big time, because we missed the whole bear market. The only thing we ever did in the bear market is we bought some counter trend moves, and we lost a little on some and we made a little on some, but pretty much we're, in the right around high water mark from the top of the bull market that turned into bear. And why? Because everything turned down. And I am so focused on pattern and not on what anybody's saying. And of course, if you listen to the perma bulls, you would have been buried. And of course, if we get into a bull market, be careful about the perma bears. We just pay attention to what the market gives. And when the market ain't given, we'll just tend to take a step back and, hang out. It's just very tough environment to commit.
I'm curious, while you're sitting in cash, what instrument do you put it in? You put it in money markets, T-bills? Do you go out and grab a little bit of the maturity at 4% on a 10-year?
There's your 3-month T-bill.
That's what you're buying?
Fortunately, we were getting zero a year and change ago, and fortunately, even money markets are up around 3%. So that's the
why not have the safety of T-bills rather than money markets? You worry about money market funds and some of the things that are going on with rates, that there could be that FTX might be a symptom of what's happening in the broader system.
I think FTX is a symptom of a bunch of crooks and being involved in
where was Gensler?
I don't know what to tell you there. I'm not gonna. I think all these people, the regulators, really don't want these things to happen, and they want to do their job. And I think a lot of these things, these bubbles that came out, are very tough to gauge. I've been yelling and screaming about them since day one. I can't begin to tell you the hate mail I've received, the death threats I've received just by saying I think it's a bubble. Gee, sorry for the opinion. But I'm not so worried about money markets, but I do know some smart people that do talk about them. So we'll see. And let me just state for the record, if money markets ever get in trouble, we'll see the S&P down at 2,500 pretty quickly. So let's hope that doesn't happen. So the good news is for cash, we're finally getting something. But my main point again is that for a long period of time, we've been doing little bits and pieces here and there, but I'm just scared, lists on a daily basis, just trying to get major trends right and just trying to drown out the noise, and it's not easy. The latest is China, what's going on there, and it's rallying up, but do you trust, because you can wake up overnight and China puts the screws again to the companies that that they're very good at? So tough call.
Yeah, why isn't the guy, I'm reading some of the feedback from the community. Why isn't Bankman in cuffs like Madoff was 3 days after it broke?
Beats the hell out of me.
We'll have to ask Charlie Gasparino about that.
And I think he's being interviewed by the New York Times today or something.
Yeah, Charlie's on this story. Yeah, Charlie's
I'd be kicking the guy in the whats, let alone asking them questions. This is look, we'll find out in the end, but for all intents, but this guy and his parents were taking all this money and buying up real estate and spending it on politics and all kinds of crazy stuff. And I just think this is one of the outcomes. You always find out the goblins when it comes to these things, and hopefully he's put away if in fact it is found out that all this stuff is true.
Okay. All right. Well, Gary, we have your message. Play it safe. Difficult to even take intermediate term positions with all the jawboning going on by the Fed.
Just a couple of other notes.
Sure.
So somebody I follow said the other day, they find stocks that go up but don't stay up. That's happening a lot. Things that look like they're breaking out of range, like this Monster beverage. Look at that great breakout a few days ago. Boom, tucked its head in like a frightened turtle. There's been 100 of these things, and that's why we just take a step back. Bull markets will have things like this break out and never turn back, and they
never give you another chance. Yeah,
exactly. And you're PO'd that you didn't get in. And I think there's maybe 5 names that I'm upset that I'm not in. Something like an SMCI. Why didn't I buy that on the earnings? So as long as there's not that much. The other thing I do want to mention is the oils. I've been flummoxed. Here's oil, and let's see if it holds here. I've been flummoxed how you had oil prices drop so much, but you have oil stocks so strong like this.
Yeah.
And I'm hearing a lot of people saying that oil stocks are going to crash soon to catch up with oil prices. I'm not so sure of that. So I'm letting you know, I'm still watching like a Hess here. If it sits around and then can break through here and hold. So I'm still watching some of these oil names if oil prices hold. So there's some things that are still out there, but just a lot of weird going on. But my main message again, and people like Druckenmiller and Tudor Jones all say it very best. They know a lot of people that have better picks than them in the market and have a better percentage of wins than them in the market, but they know how to play the downside better than everybody, and they know how to get out before disaster hits. My main message again is when you have things like a CrowdStrike or a Meta, look at these down moves. There's got to be some recognition for everybody to not pay attention to Wall Street that'll reiterate buy recommendations all the way down while institutions are just selling crap loads of stock, and you can actually see it in price and volume on a daily basis, but people don't want to listen because that word hope gets into the fray that it's going to turn back, and then you end up in the web where finally you say, I'm down so much, screw it, I don't care if it goes to zero. My message is never let that happen to you. Go get the great technical analysis books on topping markets from bull markets and study them like crazy, because this will happen again after the next bull. And it is incumbent imperative for people to protect capital when capital has to be protected. The amount of money that's been lost in the bubbles like a Tilray, recently they even ran the Bed Bath & Beyond to 30, it's down to 3. These things are life-changing, life-changing for people in their 70s that have to go back to work because they were in stable coin that opened up at 0 the next day. So just very important. You really learn lessons from this. Get your wits about you, because the protection of capital is so much more important than everything else. And the last year and a half dictates that in noises that should be yelling and screaming out there. And unfortunately, not enough is being talked about. There's still about how much money we're going to make going forward and blah, 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 in the next bull market, and buy Apple. It's a great value here, and Amazon. So that's my main message, good friend.
All right. Well, I'll tell you what, Gary, great message. And you're right. If we're all students of the market, that means we study, not being lazy. You have to put in the time and the work to have this type of conviction like Gary does. Okay. So if you're a student, study, don't be lazy. And Gary, thanks so much for coming here and catching up with your views. Don't worry about what you miss. There's always another bus around the corner. And especially now, buddy, who can expect perfection at the crap table?
Not me.
Buddy.
and
Anyway,
by the way, we're real appreciative of what you do, and with all that surrounds you in teaching everybody the things you teach on a daily basis. So I congratulate you for the hard work that you all put into.
Thank you so much, Gary. You could follow Gary on Twitter at Gary Kaltbaum. And where could they find your radio show?
GaryK.com. We post it there. We post it on Twitter. I'm on Fox Business every day. Fox News usually once or twice a week. So check it out. We post when we're on also. Again, we're pretty pointed. We don't pull many punches out there. I can tell you that.
Okay. Well, the voice of reason in a world of madness, Gary Kaltbaum. Thank you very much, buddy. My trading.
Be well, my friend.
Brother.
Thank you.
All right. That's it. You're welcome, everyone. Gary, people appreciated it. And you're welcome, Patrick. And you could join the team. It looks like about 20 minutes on the morning edge. Remember, don't just count your pips, count your blessings. Adios.